What is a dividend? This video looks at what a dividend is, going through how the process is for creating a dividend and how companies pay dividends and to whom. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel. If you press the like button, it helps me and the channel get the information across to more people. So what is a dividend? I think the first thing to do before you think about dividends is just to think about the hats of different people within a company. You've got the shareholders. Now the shareholders provide the initial capital for the company. They decide who the directors are going to be, normally by a simple majority, and then they receive dividends, so they're obviously important to this video. You then got the directors, to say they're appointed by the shareholders and they're in charge of the company. So they decide what goes on, they decide what the employees should do for work and normally decide what the shareholders should get as dividends. They're in charge. And then you've got the employees who go out and do the work and get paid for it. Now employees aren't really relevant to dividends. They just do the work, earn the profits that go towards the dividends, but apart from that, they're not particularly relevant, so we'll forget about them. So what happens in a company? So hopefully the company makes a profit, so it makes sales, it has some costs, and hopefully there is a profit left. So when there's a profit left, that profit is normally subject to tax. So the company pays tax on the profit, which means there's a smaller amount of profit left, and some of that, or all of it, can then be paid to shareholders as a dividend. And it is just that, it's a payment from the company to the shareholders. So why is the company paying the shareholders money? Well, don't forget that they provided the initial capital for the company. They're appointed by the directors, appointed by the shareholders, so it's reasonable that the shareholders appoint. One of the things they want the shareholders to do is to give them dividends back. And it is actually as simple as that. There is some documentation that you need to do when you create a dividend. So you have directors meetings that show that that it's been approved, and maybe shareholder meetings where the dividend is approved. And then it's paid out. There are dividend certificates that can be produced. So that's like the paperwork side of it. So how much can a company pay in dividends? Well, normally it has to have reserves. So reserves means profits that it's made. So those might be made in the current year. They might be made in previous years. So a dividend can be paid out of the current profits or previous year's profits, but it has to be the cumulative. So if you in year one you had a loss, and in year two you had a profit, you can't pay all the year two profits out as dividends. You have to first take account of the loss that you made in the first year. So it's the cumulative profits. But it does mean that if you made a big profit in one year and the next year you make a small loss, you can still pay the shareholders a dividend, because you may well have retained profits from the very good years. So that enables companies to pay dividends a similar amount and maybe an increasing amount every year, which the shareholders then can use as an income and hopefully to some extent rely on it to pay their normal bills. So that's really what a dividend is. It can be paid. It's paid out of retained profits. In a small limited company, sometimes people think that you can, if there's cash in the business, then you can pay it as a dividend, and it's not quite the case, because it has to be retained profits, and generally the tax bill gets paid a long way after the profits are earned. So normally, if from the start of an accounting period, normally it's 21 months before the tax is paid. So in a very simple company, the company should have all the tax that's owed in the company, normally as cash, before it pays a dividend. And I think that's one that a lot of small, very micro companies do sort of struggle with, because the cash is in the business, but they can't really get hold of it because it's really to pay the tax man. A dividend is actually quite simple. It's just the company makes profits and then it pays them out to the shareholders. And I hope that makes sense. If you'd like more updates on tax and accounting issues, then please subscribe to the channel. And if you've liked this content, then please press the like button.